reach parity with US dollar. Ooh, spooky.
See, this is why I don't go on socials. I don't like to let people strike an emotion in me like that.
We got you. Just click. I just want to get you to click. No, we actually don't even have anything for you to click. We're just coming at you with some really nice historical information about what parity is between the euro US dollar, when we've been there in the past, and what the odds are looking like that we get back there by next month or by the end of the year. First, though, let's take a look at the euro, take a look at the price action, and let people know what euro US dollar parity is by definition. What's really nice about, I really, really love, and it's too bad because it's like the least cool asset classes for the mainstream. It's like, ooh, I'm into ambient jazz, and all of 10 people in the world are into ambient jazz. Foreign exchange and interest rates are really, really cool markets because their prices really mean something. And that might sound weird, but like if you take a step back, the S&P 500 at $3,900 is arbitrary. It means nothing. You only know what that worth is or what that meaning is relative to other prices in the S&P 500. You can't take that 3,900 and be like, ooh, I get like a really cool value of Apple and Amazon and everything else from it. Arbitrary price means nothing. You look at the y-axis here in the euro, Errol, and the trip in the last year of 120 down to 105 directly translates to last summer, the euro is worth $1.20 per euro. And now it's only worth $1 and nickel. That's kind of cool, right?
Yeah, that is. That's definitely a significant change from last year, as shown in this graph.
And it's nice that in this foreign exchange market and in interest rates that like you're able to actually track things that are meaningful to you. And so now, as someone who gets paid in USD, of course, prices of goods in the Eurozone are going to fluctuate in accordance with this currency fluctuating. But you're like, damn, I could go to Italy and be buying designer stuff on the cheap with my US dollars. I could be getting J.
Cole vinyls for a little.
That's exactly. Instead of buying the US vinyl of J. Cole's recent album, you get the European import. You get that German import, and it's going to be a little bit cheaper there. That's a little arbitrage. But it does beg the question, as you see the descent from $1.25 down to $1 and a nickel, what if we get down to $1? And that is parity between the euro and US dollar would be a price of $1, which would say €1 equals $1. In fact, we're right now, as historically bad as we've been in the euro, than we have in the last 2 decades, 20 years. $1 and a nickel pretty much is the low here. 105, where we currently rest, is as bad as it's been for the euro, which begs the question, Errol, when do you think the last time the euro traded at parity with the US dollar was?
Last time I answered one of these pop quiz questions,
we made you look bad.
You remember what happened?
Yeah, it was bad.
Let's see. The last time we went below $1 and a nickel, I'm going to say, I don't see it on this graph, so I'm going to say before 2004.
All right, that's really wise guy stuff.
We're going to go 1992.
It's funny. I feel bad for you because I tricked you, and it doesn't. It feels good. Actually, I'm going to be honest. It does feel good. But you could take solace in that our head of indexing here at the Small Exchange guessed around the same thing. He was like, "Oh, probably early '90s." The date is actually it is 2002. It's literally like right before this chart starts, and I did very. With good reason, I said that we haven't been down to parity in the last 2 decades. Because it was the mid part of 2002 was the last time that the euro and the US dollar were equivalent. And we're now just 5 cents away from that equivalence. Now, keep in mind, foreign exchange markets are some of the least volatile, and that 5 cents is a pretty significant amount away. You see here in the last 20 years, Errol, the high is just $1.60. So in 20 years, we've only really been traveling about 50 cents worth. So 5 cents would be a pretty significant drop in this market.
Right. So what does this mean to you if we reach, or what does this mean to someone if we reach back to this dollar and a nickel?
So, I mean, it means relatively little to me. I don't have any trips planned for Europe. Like maybe it's like, oh man, maybe I will plan some stuff. It does mean something to me because I feel bad. We're writing a piece for the Small Exchange newsletter for next week, which goes out to members. If you're not a member, go to community.thesmallexchange.com. That's community.thesmallexchange.com. And our compliance department, this wonderful woman, Natalie, was like, great piece. She sent her correction. She was like, oh, I can't wait to go over to Europe and spend all my money. Unfortunately, the last time that we've seen this type of price action coincided with the .com bubble and the stock market crash. We tend to see this type of action around market crashes. So while your US dollar might be worth more than the euro, you might have less US dollars given action in the overall market. But it's not one for one. It doesn't have to happen that way. And a lot of institutions, it's a really tough level to break. As you see, they tried to do it in 2015, tried to do it in 2017, and weren't able to get down to that par value because so many huge institutions around the world, Errol, have their books and everything lined up with the euro and US dollar relationship holding relatively static. That's why this currency over 20 years has only moved about 50 cents. So it still is that 5 cents would be really hard for them to get to. That being said, there's currently a 10% chance that it breaks by August when you're looking at the Euro FX futures options. And you can go trade that $1 that Parity put right now. You could sell that 10% if you think that that's too high. You think we won't get down there. If you think it's not high enough and we're going to break below there by August, or there's also, September and all the other months of options, you can go there and buy that put. Or you want to make a smaller bet for or against this, you can sell the US dollar call. The equivalent for Euro USD parity would be about 168. Here, you could sell that call if you think that we're not going to get through this historic level, or you could buy it as a little flyer, a little bet on us breaking that level. Does that all make sense? Are you intrigued now with the Euro US dollar parity?
I am. I actually am a little more intrigued. The euro dollar, the US dollar, euro dollar call parity has not been shown to me before. Right when you mentioned that, I just thought of put call parity. That's why I'm getting tongue tied. But no, this makes a lot of sense.
And now it's more important to you than Lollapalooza or the Super Bowl or everything else. This is what you're going to be watching for the rest of the year.
Oh yeah, in the beginning of the segment, you were talking about how exciting this stuff was, and I almost said no one ever, but I just didn't want to be that guy. But I thought it was interesting. I love interest rates though. So you got me into that. I'm going to be checking out more of the euro.
Yeah, that's right. Yeah. A lot of people dig in interest rates as they climb to 3% and beyond. This gives you a reason. You need some drama to get into something. You've got the drama between euro and USD. The drama between Frank and Errol is over for this week. Errol, thank you so much for joining us. Make sure you check out today's assignment and everything Errol does on Twitter and TikTok and beyond. And make sure you stay tuned for Splash into Futures, which is coming up next. Have a great night, everybody. Peace.